Uh,
See, you're
That is that
trying.
sharing or not?
it says start. You started
Okay.
screen sharing, but it doesn't show anything yet.
So we're viewing a screen of nothing on it.
Okay. Yeah.
Oh,
I
there it
think,
is.
yeah, we'll turn green in a sec.
Awesome.
Okay.
We got you, Steve.
Great. Okay. So, any intro? Are we good? Do you want me to just get started while I can?
Yeah,
Uh,
good.
yeah, you can get started.
Okay. So the idea of where all this came from and started from was that Champ was designed to help existing major medical plans, especially self-funded plans, offload claims and all the things that came from it. And of course, there's a lot of really good things that have proceeded and where it can kind of be as a standalone plan. But your biggest benefit you're going to get from this is going to be on like the level funded market. So just as a recap, so Affordacare, my company that bases, again, Champ is a product of that, is the third largest broker in the US for level funded major medical plans. And to give you a little recap, just kind of 101, is on a fully insured plan, which was that most people, and by the way, if for any reason I cut out, like interrupt me right away, and then I know not to talk for like 5 minutes to myself, okay?
Yep, no
All
problem.
right. So a 95% of the entire market has a fully insured plan. It just means that you pay premiums, they pay claims, everybody knows what that is. So in theory, if let's say you pay Blue Cross Blue Shield $1 million a year and you have $600,000 in claims, Blue Cross profits $400,000. And so
Okay.
since the insurance costs money and big companies like Amazon and Google say, hey, we'll just self-insure. You have somebody has a $50,000 heart attack, we'll just cover that, we'll write that check, and we're big enough that we have enough power of numbers that it makes sense.
Hmm.
So most self-insured plans, again, are really big companies. So what the concept we're going to talk about here today is what a level funded plan does. And the idea with that is that it allows groups down to probably 7 employees in any state to benefit from this. The idea is that you're self-funding the plan, but you have a stop loss built into your fixed monthly premium. So you're never going to pay more than your fixed amount, an agreed amount for that year, for that month per person. So the employees would not even know the difference. But the benefit is that you have stop loss built in, that you have a lot, you're entirely protected. And in the best case scenario, you get all the money back that you didn't spend in claims. So because you're buying less insurance, we're able to go in most cases with a 20 to 40% savings. Everyone's still eligible. All the pre-existing conditions are included. We can copy the exact plan. We can take it over mid-year. We can give them a deductible credit if the savings are better, like halfway through the year before the renewal. Everything's customizable. Full transparency where every dollar is going because it's their money, and we're be able to be more aware of kind of claims. And so again, you can imagine if any money they don't spend, they get back, and Champ offloads all these claims, you can imagine how happy the carriers are, the employers are when you do that. So
Hmm.
with a couple of the carriers I'm going to talk about in a second, they'll give a very large discount for having Champ already embedded into the plan. It provides incredible third-party validation from as a major world-known insurance carrier to say Champ is good, and we'll put our money where our mouth is of what we're doing because of how much it helps. So the idea and why this is such an insane level of savings just on health insurance is that any group, if you guys have sold life insurance or car insurance or house insurance, every insurance on the planet wants to know what they're insuring. And the only thing in the world that doesn't ask questions up front is group major medical health insurance. So they don't know if you have 20 employees and they're on their deathbed or if they're Olympic gymnasts and in the prime of their life. So what we're simply doing is giving credit where credit's due and allowing the group to only help them if it helps them, and in no way can help them or negatively affect them if it doesn't. So the best analogy I can give you is imagine the entire world had a guaranteed issue life insurance that was just, if you guys all familiar with guaranteed issue life insurance,
Yeah.
right? It's a very high premium, not as much benefit. So
Right.
imagine everybody you talk to may qualify for a simplified or an underwritten life insurance, your benefits are going to be way better and your price is going to be way less for the only reason that you just gave them more information to go off of. And that's exactly what we're doing here. So just
So
to kind of
one
recap this,
question. Right, so
yeah.
say you run into a company that does have like half of their employees on their deathbed, right?
Mhm.
Then what?
Yep. Then what we're doing is we're underwriting the group up front. Again, and no one is excluded on that, but let's just say, for example, there's some people that maybe have, there's maybe some of you who are on 65, 66 years old, 70 years old, right? We can provide examples to those people, say, hey, these people could just go on Medicare. You're actually helping them with a better plan, and it's going to be a way to help you save money. So we're looking this from the perspective, not only it benefiting us, but it benefiting them, that we can do selective things like adding Health Champ, like looking at other prescription plans, like helping people maybe go to the marketplace. And if there are serious conditions, then we either have other alternatives for them, and or sometimes the group's big enough, like someone's going through cancer, we can absorb that and they can still get money back and it still works. So
Okay.
it's just a idea where it can never hurt them, it can only help them. That's the idea and the express kind of that we give. But it's a fantastic question with that.
All right.
All right. So if you guys can see this, again, super two basic examples. Left side, $200,000, they have 160,000 in claims, they get 40,000 back. And if they have more claims than expenses, then they get, again, the stop loss covers it. They're not out any more money than the premium they had committed to at the beginning of the year. So the last thing I'll show you is, did it flip over to that other, the side by side of the two plans?
Yep.
Okay. So this is an example of when you empower the health insurance and Champ combined as one like powerhouse best case scenario. So a 50-person group, you can see here at a $63,000 increase in their renewal. And Cigna is one of the carriers that recognizes how much Champ can help those plans. So what the carriers are looking at is saying, if we had Champ, everything highlighted here is now entirely never going to hit our plan, and we're now only covering catastrophic coverage. So we got in this group not only $100,000 discount just based on that Champ discount, but also because they went from fully insured to level funded. And of course, now the employer's benefiting with that as well. So in this best case scenario, the group is saving that 58,000 of the FICA with Champ. The employees are taking home another 66,000 with their Champ increase in pay. And then of this 531,000 total annual paid combined, the group did not use 274,000 of that. So they got that much money back. And so their overall net of the year went from a 600,000 to $132,000 total out of pocket true benefit, with their plan not changing, their doctors, the deductibles, the copays either being the same or better. So my wording of this would be, if you have Champ currently with a group, we have carriers that can give you a really powerful discount by adding this and give you credit for having it. If you'd like, I can get you some quotes with that. And basically with the group, if we just know who's on the plan, what they're paying for, and how much they're paying, right? Like what are their benefits, what's their price, and who's on it. If we have that information, we can do a guaranteed binding rate just off of the census underwrite, where we can pull on their birthdays, we can pull their MIB, and we can give a rate that would be subject not to change once we show them the numbers.
Okay. Sounds great.
So
So let me ask something. Is there like is an issue with this is that it's not well known and not too many business owners know about it, so you have to educate them, kind of like Champ?
I think Champs is a much harder hurdle to get through. They understand large brand name carriers. They understand paying a premium. There's a slight level of education, but I've never ever had any skepticism, any too good to be true kind of thing with us.
Okay. Yeah, because that's what you get with Champ sometimes.
I have
Yeah.
a question. If do you have to do this every single year? Like could your premiums go up every year?
Yep. So every year just like any other plan, the premiums can and fluctuate because of Champ and because of how our team, once we get the group, we're doing everything possible throughout the year. If we see claims come in, to look at other things, to find other alternatives, other maybe brand names and things like that. So at the end of the year, our track record is, again, thousands of different groups. And I believe we've had 12 over the last 5 years have more than a 5% increase. Most groups have been level, and the vast majority are negative, meaning that they're paying less money in 2024 than they were paying in 2018.
Oh, wow.
And Champ is a massive component of that because they have hundreds of thousands of lives of actuary underwriting data, what Champ does, and all the claims that they see that come through. So we have a very unique thing that a broker that's selling the exact same plan as you on the health insurance that doesn't know about Champ cannot get that discount with that plan. So it sets you up to be in a very unfair playing field when it comes to an apples to apples comparison with anybody else.
Okay.
You also said that they would get reimbursed for the money that they did not use. How do they get reimbursed? Is it like a check gets sent to them at the end of the year, or is it something that gets rolled over for the following year?
Nope, awesome question. And by the way, normally I only limit this to 2 questions. All 3 questions have been fantastic. I'll give you 2 more bonus questions because you guys have been so good. So the bonus the check is an actual like physical check that they get. It's paid after what's called a run-up period, and that's about 90 days to 120 days. And the idea on this is that if at the end of the year, let's say December 31st, somebody goes in for a big claim, they might not actually bill that, or it may not get back to the insurance for a couple months. So they hold that to make sure that any of the excess claims that should have still been paid, we have that. So when they get the money, it's theirs free and clear. And the other thing that's really cool is even groups that don't offer any other coverage, and even groups that say you can have, if you want to offer this to the employees, they can pay for it. We don't even want to contribute anything to it. All the money that is paid in, regardless of who is paid in, because we don't know who pays it in, right? The employer takes it from the employee's check. They remit it to us just like they do with any list bill or like with Champ. So when that happens, the check that goes to the employer is purely their money because it's owned by them. It's their plan documents. And so if they choose to share it with the employees, they can, but it is always their money 100%.
Okay.
So
Right.
similar, so Champ has something similar, right? Where they're whatever is not using the claim funds in the pool, that it percentage wise goes back to the employer. I know it's not really spoken about because it's nominal, but it's similar to that, right?
Yeah, I mean, Champ is effectively the closest thing to what you'd think of it as, kind of like a level funded type plan, where if the claims over exceed the Champ part, the employer's not having to pay money out of pocket. But in the same sense of it, if they don't use as much, they're getting that portion back too. So
Okay.
yeah.
So taxable is this how does that affect? Because that's going to be the next. Well, I'm sure it is the next obvious question for an employer. Is
Yep.
it so? If I'm going to give you $132,000, is it that's not taxable, or it's what part of it is?
Since assuming they wrote off that premium, which I don't know why they wouldn't, that
Right.
would have been stuff they've already written off. So most likely they would and should pay tax on that money.
Got it. Okay.
But again, it's a wash. It's not like somebody's going to say, no, don't pay me this money because
Right. No,
a
I get it.
percentage I'm going to pay. But no, it's still a good question. I'm sure you'll be asked that.
Can the
Okay.
employers get enrolled in this too? Like get in the group plan, or
Of
they?
course. Yeah.
Okay.
Yeah. They don't have to be, but again, a lot of them do. And yeah, it's for everybody. And we also have the ability to enroll independent contractors and
Oh, wow.
other people within other.
You're breaking up.
Yeah, he went on mute.
Yeah, no, I just got a call.
Oh.
So the idea is that they can extend this offering to all their workforce. And my line that I would use is to say, if you're an independent contractor, you can get preferred rates from us on a group scale that's probably going to be cheaper and better than rates that you could get on your own. And so you have kind of that pooling buy-in, even if the 1099 is paying 100% of their money out of their pocket. An example where the employer would still get that refund back.
Okay.
All right.
Cool. Yeah.
Any other good questions?
Um, Vinny, I think you're on
How
mute.
are you? So our position now, first, right, is we're leading with Champ, right? That's how we're talking to our companies, we're talking to our leads, right? Obviously, when we're using Champ and we're pitching Champ and we're doing the Zooms, through our discovery, we're finding out either they have coverage or they don't have coverage. Is there a way to maybe parlay this into the conversation? Do you want to get people on Champ first, or what's your expertise on that? Like, how would you position that conversation?
You could go either way. So again, for us, since we already started with like major medical and it's a known thing, it's not something scary, it's not something that people aren't sure about or if they need it or not, right? We had the luxury, which is I feel a harder sale, but the ability to say we already had all those existing clients as major medical clients, right? So we could
Right.
say, you know how you're getting money back every year? Well, we have a thing with Champ that could massively help your renewals, help your employees, help your copays. You could do this with like HSAs, or you could have a cheaper plan, right? That you could have no copays, have a higher deductible, contribute to an HSA, and then of course with Champ on the sideline, all those coverages now are zero. So
Right.
that's the way that we've approached it with existing group plans. In the same scenario, we also then have another group where if it's a brand new group and you don't have Champ or health insurance, it may be easier to talk about a known entity, which is again major medical health insurance, the pain point of heavy renewal, and doing that first, solving that problem first, and then while that enrollment's going through, saying by the way, if you want to have us look at some carriers, we can do some other discounts on that too.
Okay. Yeah, just trying to figure out how we can what
Mhm.
the next course of action is on our
Yeah.
end.
But of course, you can do both independently, and you could
Yeah.
totally get away with that. And again, kind of play it by ear.
Okay.
Okay.
Great. How does it work with captives? So they're self-funded, right? Essentially.
Yeah.
Okay. So I reached out to a buddy of mine. He's got a large construction company, and he was like, "Well, my CPA said we can't do Champ," which obviously is not true. But if they're a captive, would it, is it easier for them to go over to a level funded? Maybe would it be more beneficial or not really?
We have captives as options, so we could compete captive to captive and try to replace that.
Yeah.
But a captive is even it's in between a completely self-funded plan and a level funded plan. So if they have a captive, they're big enough that they can get away with that, and
Yeah.
that's another step to that.
Okay. Yeah.
Yeah. And if groups wanting to do that, we can totally do that too. It's just another kind of arrangement.
Got it.
Now,
Okay.
if they are captive, though, they're a super, super good one for Champ, for sure.
Yeah, that's what I thought, and I'm getting pushback from their end, the CPA, but it takes time. So
Yep.
awesome.
They're always the issue.
Now once we have somebody interested, what does the process look like from there?
So, yeah. So if they need anything kind of summed up or whatever, I can, jump on an initial call. But the idea is that, and I'll shoot you the email, Sal, and you can distribute to everybody. But it's a simple email. Again, just 3 things: who's on the plan, being a census, what they're paying, which would be an invoice, and what their coverage is, which is summary benefits. So
Okay.
we just want to be able to have what we could do direct apples to apples and guarantee that part, the whole thing too.
So
Now,
if we have someone that's not on Champ, we could get the census the same way, like print the payroll register and get that to you, or was that work the same way as Champ, or
so
how?
the census you'll have from Champ, like name, date of birth, whatever, that is good to go. So any group that's on Champ, we're well over good on the census part, but
And
we'd
if they're
still
not on
need,
Champ, what if they're not on Champ?
yep, just census, renewal, or invoice and their plan document. So if they're within 3 months of their renewal, we'll need their renewal, which includes their invoice, And if they're more than that, then just their most recent bill, who's done the plan, and their census and what their coverage is.
And how
But
long
this-
does it usually take to get back to them?
Call it 72 hours to give us some leeway.
Okay. And so like, if we're doing it that way where they're not on Champ and we need a census, I'm saying, like, could we do print it the same way, like just get payroll register, or does it actually need to be the whole census?
We
Complete.
just need to know the people that are on the current plan.
Mhm.
Okay.
And the reason that we also require the invoice is because the census might be 35 people, but the people on the plan might actually be 12. And then there also might be dependents or things on there. So that allows us to be exact of the true direct comparison.
Got it. Okay.
And how long does it take before it's actually in effect? Once-
So we can do the biggest thing is we can actually backdate plans. The biggest consideration is if they're going to have their ID cards in time.
Okay.
So let's just talk about June 1st being kind of where we are today. The we talk to a group, we get them on board, we get that information we talked about, and by Monday or Tuesday next week, we have like that side-by-side comparison to give them. We get the green light from them. We would set up a kind of a portal for them that if they want to add other like dental and vision and short-term disability in there, it's like one link, one portal that they can add a bunch of stuff, and it's super easy integrated within their payroll. So whenever they kind of do the enrollment, you're getting a lot of, and we're going to talk about money in a second, but there's ways to get a lot of additional money all wrapped in that same thing. So it's not just the benefits themselves, it's all the stuff that you get with it. And the process is like crazy easy for them to do it.
Yeah, so it's
So-
a la carte essentially for them, right? It's yeah, okay. That's awesome.
Yep. And then, yeah, so if it's a group under 25, we would send them a online link to basically complete, and that would guarantee those rates or kind of firm up those rates. If it's more than 25 people, like I said, we can do a census underwrite in most states where they don't need to fill out any applications at all.
Okay.
And then that's kind of more what you're used to with Champ, right? Where they just kind of auto enroll on the plan
Mhm.
based on the census.
Okay.
So to talk about money, the idea is, and I'll just talk about kind of a group with Champ. So again, you're getting whatever you're getting paid on Champ, plus then the health insurance, which is about 2.5% of the total gross of the entire per month per year. So an average group, let's say we're factoring the family members and the spouse plus the employee and the individual rate. So let's just say $850 would be like maybe that combined premium. So at 2.5%, that's basically $25 per person per month forever residually, just like Champ is as well. You factor in the dental, the vision, other parts in there, you add Champ in there, and you're easily in that closer to like that 30, 40 person dollar range if they add everything else as well, or $30, $40 range. So it's
Okay.
gonna
And then it's at
massively
2.5%, right? You're in that range?
just the health insurance part. And then we didn't even talk about the Sal. There's all the other things you can add on top of that too.
Okay. Yep.
So health insurance is about $20 alone. And then you add in those other things and it could jump up a lot from there.
So now once we have them and once we hand them off to you, you guys pitch them on everything else, or you offer it to them?
It-
How it
Kind
works?
of, but we don't even really need to do it because it's already built in that portal. So they're just kind of, when they go in for their
Oh.
benefit selection, they're just basically doing it. It says, hey, you want dental? It's $5 a paycheck, and then your employer's paying a percentage of it. And most benefits, the employer picks up all or most of that cost. So you're getting a bunch of free things. And then Champ is also then saving that money that then they can use to then purchase those other things on top of it too for free,
Got
which
it.
then increases your paycheck even more.
All right. Awesome.
So it's a way that you're going to potentially like 5-10x your Champ commission by adding more value, making it stickier, and then not allowing another broker to ever add value that they could take your group over.
Yeah, that's great.
And you said a minimum of 7?
7's where it works really good. I don't know if you guys know, but the new champ minimum is 5. We
Yeah.
can technically go lower, but in groups like that, I'd probably say 5 to 7 would be like the lowest and that would provide the most benefit.
Okay, cool.
All right.
And what
So
do you find being like the sweet spot? What's like the sweet spot to target?
So if it's under 50, you're talking about a very underserved market that has very little competition for other like big fish and big brokers. So
Okay.
they've probably never heard of it. It's probably a huge value. And probably the broker that they're with doesn't care enough about them because most plans pay so little that there's not even a whole lot of work that they even spend with them. So under 50 is where you get the highest commission based on a percentage. When you go over 50, since it's more competitive and there's more risk involved, the commission does go down based on kind of more of a PEPM number versus the percentage. And it's still worth doing, but your sweet spot of the best, fastest way to have some success, kind of just like Champ, is under 50. And unlike Champ, you can do a 10, 20, 30 person group and make a lot of money really fast and overnight because this pays basically the same month too that it goes in active.
Awesome. All right. All right. Great. Um, Trying to think what other questions I have. Cynthia, do you just have a question? I thought I heard you asking something.
No, he already answered it.
Okay.
Yeah, my
Okay.
biggest thing is just how do we position it? But I think he did a great job of answering it. Just that we have
Yeah.
to kind of
Pretty
reverse engineer it.
straightforward. Yep.
So
Hey, can I ask you guys a question?
no,
Yeah.
On a scale from 1 to 10, how jacked up are you guys right now?
I'm ready to go.
All right, a 6 then, a hard 6.
Yeah,
yeah, no, 100%.
I'm actually really looking forward to this. So I think we broke up before, but just so you know, like our background, we did ERC and we did phenomenal with ERC. We have literally thousands of clients that we worked with ERC, and I relayed that into Wealth Concierge Group. I created this last year, and I'm basically building a concierge service for business owners. So I have a big list of business owners, clients that we're going to with Champ, and I probably have a ton that will probably want to look into this for, at least two. I mean, to me, it seems like a no-brainer to go to ask somebody like, how do you feel about your health insurance? How do you want to get a quote on something that we could probably beat? It seems like an easy no-brainer to me. They have
Yep.
nothing to lose, right?
Sure.
Champ.
They have absolutely nothing to lose. So we have this whole list of clients. We have a nice base right now, and Champ is a little harder because it's confusing, but this really seems like a no-brainer to me.
I agree. And the fact that you already have experience with those clients and they know you because you've already delivered on a savings, and now their biggest expense they have outside of payroll that you can help them solve, it's a really, really good opportunity that you'll be able to, again, the truest probably residual income second to Champ that you'll ever have.
Yeah. All right.
Is there a portal that we'll have that will be able to track everything like there is for Champ?
Yeah, all of your clients and stuff too, it depends how much you want to be involved with. And so again, our value in this is that we're basically giving you our MGA contract. We have a 0.5% that we get from the carrier directly that has no impact on your commissions at all. And that allows us to do 100% of all the service, the renewals, the 5,500 filing, all the compliance work, all the ID cards, all the inbound employee stuff that happens throughout the year. And so we entirely add as much value as we can without really outside of you guys giving us the group and that information. The entirety of including the renewal, is done and handled by us.
And then there's a way for us to track everything.
Yes. And so just if you want to see so every month you'd see again, very similar Champ. Here's the number of lives. Here's everything else. You're paid directly from the care itself. We are not an intermediary in that we're not taking the commissions and then remitting to you. You're getting paid the
Got it.
full contract directly to you guys.
All right.
Um,
Yeah. So, I mean, I have a CRM on my end too that we're going to keep track of. So,
Okay.
yeah.
Yeah. There's really not a whole lot of stuff with it because most of the stuff is either like, have we sent that onboarding link or not? And then it's either kind of an all or nothing. There's not really kind of steps along the way like there is with Champ. So I think that CRM would help when they've already been set up and finalized. Yeah, you could go in and see
Exactly. Yep.
what they've spent on claims and all the other kind of detailed stuff with that. But yeah,
Okay. Cool.
Is it the process similar to Champ where it's like, okay, we onboarded them, we did the census, we did the proposal, and then it's like we got to do a TPA call, and then we have to do like it seems like clunky like that. Is it nothing like
no,
that? Right?
it's
Yeah, I didn't think
way,
so.
way
Yeah,
faster, way easier. And
yeah.
uh,
Well, it's similar to like when like Sal and like when Aetna reps used to come, and, you know, and pitch their thing to us, right? They used to send the girl or the guy, and they would just basically you would sign a form and say, I want this, and then essentially it was coming out of your paycheck, you know, 2 weeks later or whatever it was that whoever jumped on board. It's the same, it's the same thing essentially.
Yep.
Same process. Okay.
yep,
Just
we just simply tell the employer, here's the people that have enrolled. You're going to withhold this on their paycheck this month, and we're going to ask you for the money, you know, in a month from now after you take it. And pretty stuff, yeah. And then you're
Yeah.
basically paid that same month, either on the 10th and the 20th, give or take a day each month. So depending when they pay, if they pay late, it would pay that 20th if it misses that cutoff. But basically paid 2 times a month also.
Yeah, and this is more relative and known versus Champ, where Champ's kind of like an outsider, and like this, it seems like a brand new concept. And that's what we're getting. We're getting a lot of like, what is this? Is it, you know, a lot of
Mhm.
mixed bag questions, where this is pretty straightforward. Everybody knows what health insurance is at some point. Right.
Yeah, and then like I said before, you now have a major carrier saying that we will give you a huge discount if you do this. And so I think that third-party validation is huge to help assist Champ in that sale when you're trying to you kind of explain where this truly helps.
Yep, absolutely. Okay.
All right.
Next week too, we have 2 really, really big attorneys that we're bringing on. So there's one of the best records as a IRS defense attorney has a letter that we'll send to you guys here shortly. Basically, like, Champ is no problem. I would defend it. You'll win automatically. There's no way you could lose, blah, blah, blah. And so that's another thing that could help some groups. He'll also get on the phone with groups and
Oh,
basically
wow.
tell them why you don't need to be concerned. This is what I'd be looking at. And I would defend you if you guys had any issues with it.
Okay.
The second one is from a very large firm. I want to say they're in the top like AM 100 firms, and she's working on an additional letter, and probably the biggest name. She's an ERISA attorney, but it's by far the largest like law firm that we have that's like 100% black and white. That again, we'll talk to a group. She doesn't need any split on it. She does charge a pretty reasonable hourly rate, and then you can bring her on whenever you do, and then you can either have the client pay for it if they request it, or we can work on some split with it too if it comes to it.
Okay.
All right.
Great. Good stuff.
All right. Well, if you guys need me for anything else, we can, do this call every month or so with other people or whatever. But I think you got the gist of it, and yeah, hopefully you guys lose some sleep tonight over it.
Yeah. All right.
Already did.
Sounds good.
Thank you so much.
But you're in Texas, right?
Yeah, I'm in Georgia right now, but yes, I'm normally in Texas. And the other thing, which I'll make sure I don't forget, I'll connect you with our group team. So when you ever have a group that either a question with it, or need help selling, or just send that information over, you'll be sending it to all their emails, and so I'll get you the right stuff for them.
All right. Perfect. Sounds good.
All
All
right.
right, I'm gonna come up to see you
Thank
guys
for your
sometime
time,
soon.
Steve.
You gonna come up this way?
Definitely come to New York. Let us
Okay.
know when you're headed up this way.
All right, same here.
I'll take you to
Talk
the
soon, okay?
Jersey
Bye, guys.
Shore. We'll fist pump. There you go. It's good.
Let's go.
It's a natural.
Happy
I'll work
Jersey
on
Day,
it.
everybody.
I work on my wrist, keep my wrist straight, but yeah.
Well, we can
All right,
fix
we'll
that.
see you
up
guys
here.
later, okay?
All right.
Thanks,
Take
Steve.
care.
Take care.
Bye.
Thank you.
Bye.
Well, that was fun.
All right.
We stopped
All right, hang
recording.
up. JR hung up?
JR's out. I think he was with his kids.
It seems,
Uh,
Oh, we knew about this meeting a week ago and everybody scheduled something.
I'm in my car as
Hey,
usual.
Brian, are you there? I know you're on mute now. I'm just seeing if you're
Yeah,
listening.
I'm off of mute now. Yeah, there's a lot of good
Right.
information.
Yeah, that was good. So this is something that we're ready to go with now. We're at it now, and the PEPM is even higher on this than it is on Champ. It's significantly higher. So just a combination of everything is I mean this can go really well, you know.
seems so much easier than Champ
This
altogether.
is easier to sell than Champ, and then once they're in there, then
It's an easy upsell, yeah.
yeah. So either if they're in Champ, we could sell them, or if they're not in Champ, we get them on this. We could sell them Champ, and or we sell it combined. I think this is like once people start understanding preventative healthcare, and now we know all the legality behind it, how IRS got overruled. This is going to become a big thing, and with these two combined, I don't know. I definitely am excited.
Yeah.
I'm a hard 10, not a hard 6.
Just laughing at that.
That was a really good
Hey,
pun, though. I'm not gonna lie. That was a really good pun. I'm a hard
Hey.
5.25, but it's okay.
Hey, Sal, real quick. Number one, do you have to be licensed to do this? And then number two, I guess you'll since I'm an affiliate, you'll send out kind of what the splits will be for that part of it.
Yeah, so this is 2.5% of whatever. So it's going to be different for every plan, right? Depending on what the plan costs. So like he was saying, like an average plan, I think like an average family plan was like $850 a month. So you're getting 2.5% of that. So it comes out to about $20 a month. That comes out to. So
Okay.
basically $2 per employee per month, which is much higher than Champ.
Yeah.
So
Okay.
yeah, so that's pretty awesome. So it's going to be 2.5%. And if you do get any other reps, so 2.5%, I worked out a deal with him. That's for this group, right?
Okay.
Everybody else that comes on is going to come on at lower, and they're going to have to work their way up. They
Sure.
might
Okay.
come on at 1.5%, and then maybe they can work
Okay.
their way up. What we'll do is we'll work out a deal where if you get another affiliate on, you'll get 0.5% or
Okay.
somewhere.
Yeah.
I got to figure the
Gotcha.
exact number, but it's going to be somewhere around 0.5% or a quarter.
Yeah.
You got to do the math on it to see what
Like a
works.
half, like maybe like a half goes to WCG, half goes to me, and then they get 1.5, something like that.
Yeah, it's going to be something like that.
Okay.
And then as you do volume, then we could, talk about, if you're doing massive volume, then we could always negotiate and go higher.
Okay. Perfect.
And as us as a group, as we do more volume, I can negotiate with Steve.
So we
Sounds
adding,
good.
are we
What's
gonna like automatically, once they say that they have health insurance, are we kind of like gonna always offer it in the Zoom?
Yeah, I would 100%.
100%.
Just ask them.
Can he change your pitch again?
Yeah, that
Oh,
was my question. Like
I would be like, are you, if you have insurance now, are you happy with your insurance? Are you happy with the premiums you're paying? Are you willing to look at a plan that could possibly save you up to 40%?
Because
With
isn't it easier
the
to
same
stop?
carrier, with the same exact carrier, potentially, right?
yeah.
You can keep the same carrier. Yeah, he said that in the
Well-
he didn't say that on that. On his Zoom, he said that everything could stay exactly the same.
Yeah.
So whatever carrier they want to choose, it just happens to be that Cigna happens to I guess approvable the Champ side. So that's why he uses that one.
So in the discovery, guys, we'll fine tune it. The obvious thing to add here is, do you have health insurance? And, if the answer is, so far we've gotten a mix. We got like 50-50, I guess, on who has and who doesn't. Do you have health insurance? Oh, do you? Okay, great. Are you happy with what you're paying now? Would you be open to a conversation of hearing about, how we can save you anywhere from 20 to 40% on what you're already paying? Right?
And then if they don't have health insurance,
Are you
it's
interested?
likely a financial reason, like, hey, listen, I know health
Why?
insurance is really expensive, right? But what if I could get you a really amazing rate that's hard to pass up, like something like that. We'll get creative and get the exact wording down, but most people don't have health insurance because they can't afford it, right?
Well,
Uh,
let's find out why.
Complaint is how much it is, so it
Yeah,
should,
so ask them like, why don't you have health insurance? See the reason why. You're probably gonna say because it's expensive. I can't afford to do that right now. Or what if we could introduce you to somebody? Just get a quote. All you gotta do is get a quote, an
I think
estimate.
that's how we have to play it out. It's just kind of
Yeah.
like very simple. Just get a quote. Doesn't
Yeah,
cost
that's it.
anything, doesn't do anything. We're just gonna give you, like, if it works, it works. If it doesn't, it doesn't.
Remember,
Also,
companies
more
have,
incentive for them to give us a census.
right, and
Yeah, we
companies,
just get a quote at that point, they might go more for it. Go ahead, Ben. Sorry.
no, and companies have to offer it. If you have 50 or more, you have to have
Yeah,
health
so
insurance,
you
right?
have to offer it. Yep.
So those are the
A
ones, I
lot of
mean,
people probably wait until they get to that point, you know, and until
yeah,
they're
but
on
no,
it.
no one's excited to do that, right? So no one's excited to say, "Oh shit, great, I get to do health insurance now," because they know how bad the premiums are.
Yep.
Like, I talked to a friend of mine. He's a much smaller company because once I told him what we were doing, he's like, "Oh, I'm paying." He goes, "I pay like $3,400 a month in health insurance, right?" So, and that's like if he only has like 3 or 4 employees at that point. But
Mhm.
and then what are they doing with 7? I think is the low end on this.
7, yep.
Okay.
All
Yeah,
right.
this is a whole other pitch, a whole other position on this.
Can
I
you
mean, I think it's a pivot.
Yeah, it's a pivot, but I think we have to re-engineer it a little bit, right? Champ's still really good, right? But if it could be Champ plus, or it can be Champ alone, right?
Mhm.
For the employer, because you have to show the benefit to the employer. We're getting employers on the phone, and we're essentially saying to them, for right now, we can save you FICA tax. We can save you a ton of money in your payroll. So that's the get. So that's how we're getting people interested. I think while we have them on the get during the discovery and furthermore in the Zoom and the presentation, we have to get them more excited about this and let them make the decision if we want to offer that. You can do one or both.
All right.
So do
Yeah.
you think Gia has to change it to where it's kind of like she's gonna ask them if they want just a payroll tax savings, or if they want to go the route of, saving on health insurance?
I think that should be for the discovery call at the minimum. I think Gia just sets the calls, because they're all interested in the champ plan. That's what they're really, interested in learning about. And that's how we set the calls with that. She's going to ask about health insurance regardless. It's one of her questions so that we know based on that, what she writes in her notes for the sales rep on the discovery call to, ask and kind of take it from there.
All right. Vinny, can you send this to everybody? The copy of the video?
Yeah, once I get it, I'll email it to
And
everyone.
I had Read AI open also, so I can definitely see with the notes and stuff and that, and I'll send it to everyone as well.
Send
Thank
that
you,
to everybody.
JR.
Sweet.
All
All
right.
right. My,
Cool.
my brain's going crazy now. All right, awesome.
Mhm.
All right, anything else? Anybody have good news? Positive news? Anything new?
I'm
Anything
actually
exciting?
emailing the guy David right now. He didn't email you yet, right?
No, no, no.
All right, I'm CCing you on it.
Yeah, I would definitely put in a little nugget about this too, because he's got 300 employees. So he didn't offer anything, right? He said yesterday he didn't offer anything.
Okay. He did.
Oh,
He
yes.
has health insurance.
Yes. That's what it was. Yes. But we can save him more, obviously. So we're gonna tell him anyway.
Do you mind? Because I gotta get out of here actually. Do you mind emailing him? You have his email, right? With CC me on it.
Yeah, in the text message.
Yeah, you could do that.
Yeah, what do you wanna just text me and then if we get some bullet points and then I'll craft something nice.
No, just like great call yesterday. We're looking forward to helping you. As discussed yesterday, just connect us to your payroll person whether it's Irma or whoever else, and then we'll take care of the rest for you, and we'll, just basic. We'll get you the estimate. If you want to mention the health insurance, you could put a little something about the health insurance.
All right,
I gotta go make dinner.
bye, Cynthia.
Talk to you guys later.
Thank you,
Alright.
bye.
Later, guys. All right, yeah,
All
I'll draft something. Sounds good.
All right, cool.
All right, man. I'll talk to you later.
I'll talk to you later.
Bye.